Let's talk about variant view today. To make money in stocks, you need to believe in a different outcome for the business that the market is not pricing in. And more importantly, you need to be right. And that's why investing is harder than many newcomers think, because it's not about buying the lowest valuation stocks or buying the best or the fastest growing stocks at any valuation. And these are some of the examples you're seeing on the screen. Look at the drawdown you suffer if you bought at the peak, with no regard to the forward valuation or the business trajectory. So how do you generate the correct and variant view? Well, here comes the bad news, a recurring theme of my content. There is no shortcut. You need deep expertise in the industry you're looking at, and a broad range of pattern recognitions, so that hopefully some of the mental models you have encountered in the past help you understand the situation at hand. And today I will walk you through an investment case shared by the famed value investor Lee Lu of Himalaya Capital on a misunderstood South Korean IPO. Let's dive in. MegaStudy is a South Korean tutoring company that prepares high school students for the most crucial exams of their lives, the college entrance exam. In Korea, as well as in many other parts of Asia, the college one gets to attend significantly influences the caliber of companies one can work for throughout your career. I guess in the US, the target school is a similar concept, more industry specific. Many individuals in these regions work for a single company their entire lives, although that's changing over time for the better, such as working for Sony in Japan or Samsung in Korea. As a result, students and parents are deeply invested in exam preparation. And the emphasis on exam scores by college admission offices creates a high demand for after-school tutors. This demand, coupled with the limited availability of good tutors and their limited time, results in pricing power for the best tutors. MegaStudy, as the first mover, capitalized on this market dynamic by hiring the best teachers, recording their tutoring sessions, and make the content available online. The company made the best test preparation content affordable for a broader audience, not just for the affluent, while creating a more scalable business model for itself. So the company was preparing for its IPO in December 2004, after growing revenue by triple digits while achieving a 40% operating margin in the prior 3 years. The IPO was priced at 18,500 Korean won. For a business with 6.3 million outstanding shares and 50 billion won in cash post-IPO, assuming a 1 to 1,000 US dollar to Korean won exchange rate. This translated to a $120 million market cap for a business that did 15 million US dollars in earnings in 2003, which is 8 times 2003 earnings for a monstrous ROE business. Assuming continued revenue growth in 2004, it's even cheaper on 2004 earnings. Why was MegaStudy so cheap at IPO? Well, something happened. In April 2004, the Korean government released a free tutor service that is perceived to be a competitor to MegaStudy. What happened to MegaStudy's business after the launch of the government service? In the second quarter of 2004, MegaStudy's online lecture revenue fell by 7% year over year. In the third quarter, online lecture revenue dropped 28% year over year. Now, perhaps a business facing credible threat from a government-sponsored alternative deserves an 8 times 2003 earnings valuation. Well, was the Mr. Market right? Or was this a big opportunity to buy a deeply discounted market leader that provides a mission-critical product to the Korean high school students? How do you generate a variant view? First, let's understand the government's new product. So the government pays its tutors a fixed salary, while MegaStudy gives its teachers a 23% commission on all the lecture fees they generate. As Charlie Munger famously said, "Show me the incentive and I will show you the outcome." Top teachers are likely to stay with MegaStudy because of the revenue share, while mediocre teachers may work for government service, knowing that they have limited ability to attract a sizable fan base anyways. In fact, the fixed salary provides a nice downside protection for those types. And on the customer side, what do the students and their parents value the most? Is it price? Or is it getting the best product to maximize their chance of attending top university like the Seoul National University? They value the best product. And MegaStudy, with its best teachers and content, will attract customers with the willingness to pay. And what is the barrier to entry for tutoring services? What if a new entrant decides to offer a 33% commission to attract the best teacher? Let's go back to analyzing the incentives. Ultimately, the teachers care about the absolute dollar amount they can get. MegaStudy, being the scale player, Career has the highest absolute dollar amount of fee pool, making a 23% commission more attractive than 33% of a fee base with a new entrant that could be only 1/10 of Megastudy. To give an example, 23% of 100,000 is more attractive than 33% of 10,000, right? So Megastudy will likely attract the best teachers because they have the most amount of students and the fee pool to incentivize the teachers to create content. And the two sides form the flywheel. More students use Megastudy. That means more dollar commissions the tutors can earn. Knowing the commission prospect, the best teachers will flock to Megastudy, which attracts more students, creating that virtuous cycle. If you found this helpful, please give it a like and subscribe to my channel for future contents on equity research, business analysis, and career advice. How should Megastudy solidify its position? Very simplistically, help students score high on the entrance exam. That's it. Drive results and the customers will flock to the best product. Megastudy's founder was one of the star exam teachers in the country, and he had connections with all the teachers in different subjects to whom he offered equity to when he was founding the business. By incentivizing top teachers in a variety of subjects, Megastudy was able to achieve the initial critical mass. And in Hamilton Helmer's 7-Power framework, I argue Megastudy really enjoys the access to the corner resources, which are the top teachers, and then they build the scale benefits and the network effect over time, which ultimately translated to a brand. Meanwhile, the government's free service is expected to be left with mediocre teachers, which also means an inferior content product. So through this analysis and thought process, we conclude that the government's free service is no threat to Megastudy's positioning, and Megastudy will likely be the long-term winner in the Korean tutoring market, and we will invest in the company at 8 times 2003 EPS valuation. So what happened in the fourth quarter of 2004? Online revenue increased by 15%. Maybe we're right. Megastudy isn't affected. Or perhaps Megastudy is dressing up the results to help sell the IPO. Both are possible. And heading into 2005, what happened in Q1? Online revenue was down 12% year over year. So the national college entrance exam takes place in November of each year. Maybe students were trying the government's new service still because there's a lot of time left. If they found out the government product is subpar, they can still commit to Megastudy just in time for the exam. And at this point, if you haven't done the work and come to the conclusion before, maybe you say, okay, Megastudy is losing market share. Or this was the time to double down and buy more stock because you believe the government service is not a competitive product. Now, of course, this is easy to say after the fact as a case study. So what happened in second quarter of 2005? Online revenue grew 22%. This quarter was crucial as students became more serious about preparing for the exam, which takes place less than half a year away in November. Perhaps now the students have tried the government product and are flocking to the market-leading product by Megastudy. Continuing on to the third quarter, online revenue grew by 37% year over year. The re-acceleration of revenue likely came with the multiple expansion that really moved the stock upward. And the final question, will Megastudy dominate the online tutoring market? In hindsight, it did. It overcame the threat of new entrants, which really distills down to the flywheel of having the best product that attracts more customers. And the government's free service definitely turned out not to be an issue. In the 3 years following the IPO, revenue grew 50% annually, while maintaining a 35% operating margin. And its revenue base was 6 times larger than its closest competitor. The stock became a 10-bagger. What did the market miss? It incorrectly perceived the government's free service to be an existential threat to Megastudy's business model. As you can see, the variant view involves using reasoning and fundamental analysis frameworks to gain conviction. I hope this proves to you that there's no shortcut to outperforming in the stock market. It requires hard work, pattern recognition, courage, and temperament. All of these things are easier said than done, and most fail at the hard work part. As a side note, Li Lu pointed out that by the time the stock had 10-baggered, Megastudy traded at 30 times earnings and had an 80% market share in the online tutoring services market in Korea. Was the stock still a buy then? I suspect Li Lu exited the position. Based on the stock chart, it was basically flat for another decade or so. In hindsight, it wasn't actionable from that point on. I don't know exactly what happened afterwards. Maybe they struggled to come up with new ways to grow. Maybe the rise of social media means it was easier to disintermediate a company for the best tutors to go direct to the students. However, this is beyond the scope of a wildly successful multi-bagger investment over just 3 years. If any of you know what happened after 2007 for Megastudy, please let me know because I'm very curious. If you want to hear more of my take on the investment management industry, I have 2 great videos for you in the upcoming screen.